Hello everyone, this is Teddy Kexet, and we are here today with a Forex Euro US Dollar Bearish Engulfing Line Sell Signal webinar to show you what's going on with the on today 11/11/2020. And before we get into our Sell Signal webinar, let us just post this disclaimer real quick to remind you this webinar is for illustrative and educational purposes only. And since we're going to be discussing a bearish engulfing line sell signal, we're going to give you a little plug for the book High Probable Japanese Candlestick Patterns, which is .com in paperback and Kindle versions. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And also remember to subscribe to this YouTube channel so you'll be alerted to when we come out with other videos. And with that, let's get into our Euro. Okay, so on Monday we had, on Monday, November 9th, a bearish engulfing line sell signal formed. We had formed a higher move high after having made a higher move low, which puts us into a neutral bias. The market had been kind of in a bearish way since September, and then we had a nice little bounce right around the election, and we screamed up to make higher move highs. So the question is, what do we do? Well, we know that if you're making higher move highs and higher move lows, it's a bull market, and inversely, if it's lower move lows and lower move highs, we have a bear market. With this is an indication for indecision. Obviously, we know the U.S. elections are still undecided. There is no clear transparency on what's going on, so we have that going on. But then the euro, besides having the U.S. elections that impacts the dollar, the euro has Brexit coming up. That's here on December 31st. So the UK and the EU have to come to some sort of agreement as far as trade, as well as with the U.S. So all these things are coming to fruition in the next well, now it's already, today it's 11/11. We have under 2 months for all of this to happen. So we will have a president-elect or incumbent president confirmed as the new president again, or we will have also exit decision as well. Now, the Brexit is going to happen no matter what. The question is how does trade happen? And the biggest thing is that they have to come to some agreement, because after the 31st, things will stop. So they just on a contract basis. It's a legal thing and all kinds of other issues. So they will have some sort of agreement. What it will be as far as the whole piece of the pie, I doubt it. I think what they're going to do is put together a outline that they can function off of and then evolve it as they go along. And the same with the U.S. It's pretty much similar to what's already been in place, except for a couple other tones. But really, it's just a matter of basically dotting I's and crossing T's when it comes to the U.S. But this does all have to happen, and because of that, we're going to have pretty much a sideways motion. But the sell signal right here has us leading on support, and this $17.24 level, this red dotted line here, this is a key pivot level, which comes right above this upward sloping support line. It's been holding this trend intact for multiple months. So we did dip below it briefly on this day here. This was on the day after the election overnight, and that was crazy volatility that day, so that low really doesn't count. That's an algo spike. So we're looking off of the day beforehand as our major support pivot point for this trend as far as an actual major low, if you will. And right now we are wedging. So as you see from that upward sloping support line, and then we have the sell signal that we had from Monday, we're coming back towards this upward sloping support line. Now, from the high that we had from a few days ago, and the high that we had set in September 1st after this head and shoulders sell signal, we had this market in a neutral to bearish posture. What it's really done is establish a range over the past few months, not really outside of the realm of it's not really any rocket scientist to see that this is what's happened or why it's happened, because we knew that going into the election that there would be a lot of indecision. There's for the most part, everything is divided in the U.S. as far as what the election is concerned. Coronavirus is also on the table. That's the thing where things in the U.S. weren't going well, but now things in the U.K. as well as in the EU are not doing well either. These are all things that are weighing on the euro. So I think what you're going to have to key off right now is this $19.22 upside breakout pivot and this $116.03 downside breakout pivot. This high at $1.1922 confirms higher move highs, which would be very bullish, not in the sense that we're looking for a screaming rally, but I would look for the euro US dollar to continue to pressure resistance should we take out that high. Also, should we take out the low at $1.1603, I think that we have a really good chance of settling down into this bearish target zone. Most likely, with this bearish engulfing line sell signal that we've had here, if we get below this key pivot level here at $1.1724, then I think you're going to have the bears really grinding this thing down to this low that was set just last week. And if we fall below $1.1603, then I think the $1.1525 to $1.1362 price targets down here, these are these tan dotted lines, that's probably where you most likely see the market to gravitate to on any forced or harsh sell-off. I think right now what you really have to key off is we're wedging right now. If we take out the upward sloping support line, and especially this key level here, I definitely think we have a good chance of following through. And once we take out $1.1603, well, then we will have made a high here, which if you really look at it on the longer scheme of things, even though we made a lower move low and a higher move high, which is neutral, if we go back to September, this could have been the low that we broke down to. We set a high here being a lower move high, because on the longer term time frame, it could be actually the beginning of another big bearish sell-off, which then would have us coming down into this bearish target zone. So the bearish target zone here, it goes from $1.1525 down to $1.1216. Now we also have this other upward sloping support line that comes in from the multi-month chart, and it comes right through this bottom half, almost actually lower third down here. This would be a really nice area to find support and see the market actually start to bobble around in. Like, it wouldn't surprise me for this market to spike down in here somewhere around this $13.62, maybe even tag this upward sloping support line, and then bobble around it. Now, especially if we get down towards the Brexit date, this would be a very harsh sell-off for it to occur between now and then. Not that it wouldn't occur, but it could. I mean, as long as coronavirus doesn't really escalate, I think there's no reason to expect any major trend moves. And that's the thing is I think you need to be leery of. We have the sell signal. We're looking for support to get tested, but we're not looking for any major trend moves. I'm not saying that we're not going to have volatility. I think on any individual day we're going to have some extremes that the market swings around in. I think range traders, for the most part, on most days, selling into selling into highs and buying into newer move lows will probably be something that may work out for them. For swing traders and trend traders, be very cautious. Like right now, we have a sell signal. So if you're bearish, like I would definitely be mindful of this $19.22 area. Any rally above here, I think your goose is cooked and you're on the wrong side of the market. And conversely, the same as if you are a bull and you're looking to buy into this current sell-off over the past couple days, this $16.03 would definitely be your threshold of being right or wrong when it comes to being long. So I would be very mindful of those pivot points. And what I really want you to concentrate on here is that if we fall below $17.24, this dotted dash line, this gives us a good reason to hang on support and come into this bearish target zone. But if we stay above $17.24, this market is hard pressed and sideways going up to $1.19. And you can see the bulk of the trading going back to August. That, let's see, if we go, let's put in a nice steady line here. We'll put this in here, and then we'll put this right in here. Well, let's drag that down right to about there. Okay, so see these two purple lines here? That's the bulk of the trading. So I would expect that most of the action that you're going to see will be somewhere between these two pivot points, around $18.85 and $16.15, going into Brexit. After Brexit, that's a totally different story. One new year, deadlines are met, agreements, whatever they are, will be made, and then we'll be ready for not necessarily renegotiation, but for tweaking when it comes to the UK and the EU. But the thing you got to be mindful of is with the coronavirus escalating in lockdowns, it's going to be hard for the euro to find a lot of bullish strength. Dollar, when you're looking at the whole world, and especially these major currency crosses that are biggest components in the dollar index, actually, the euro especially, it's not likely that you're going to see any major trend moves. So that's one of the big things here with this video today I want you to take away from it, is that it's not that we just have the sell signal. I'm not saying you want you to go sell the market, the euro, US dollar, or whatever. The trade is already on. So, and we are definitely through most of what it would be on the short-term basis as far as a target level. That's where this key level is here at $17.24. But the longer term, especially if this is a truly lower move low from this high that was set up here, and we actually have a neutral to bearish true trend, if you will, that's going to continue to manifest itself, then I would say be very mindful of the fact that this upward sloping resistance or support line, as well as this key pivot here, is going to be most likely taken out, and then we'll see the bears pressing this 116.15 down to 116.03. Below there, it's a hop, skip, and a jump down to 115.25 to fall into our bearish target zone. Once we strike into that area, it would not be out of any real big surprise that the market doesn't snap back into our range that we've been in for the past few months, bobble around, and then continue lower. And we'll see how that manifests itself over the next week or so, and especially the next couple days as we head into the midpoint of the week right now into Friday. So right now the bears are in control, and you're in control too, because you can actually subscribe to this YouTube channel, so that way you're aware of when we have new webinars coming out. So we have this sell signal today. I want to thank you very much. We don't have any questions on the chat right now that weren't really answered from our little discussion here. So once again, we had the sell signal on Monday. We're looking for a little bit more of a bearish follow through for the euro US dollar, and check us out at forex-trading-unlocked.com for all your forex needs. There's all kinds of free charting, free information, and all kinds of benefits as a forex trader that you can access without any membership or anything like that. You just go right to the website and go right to it. And then also remember to check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com, and through that you can learn how to trade this bearish engulfing line sell signal. You can find out where to put your stop, what your target would be, and also how to manage the signal. And right now the bears are in control of this move, and we'll see how this manifests over the next couple days. So stay tuned to forex-trading-unlocked.com. You have a great day, and take care.